mystery, the suspense, the assumption, the buzz, the view, beliefs. So what we can discuss today and ahead of the board meeting are just two things. If they raise capital, what happens? And if they don't, if they fail to raise the capital of $2 billion, which is what they'd inform exchanges, what happens? So I'm going to take that conversation forward without getting into yes, why, no. We won't speculate. We will simply discuss these 2 points with Ravikant Bhat. He represents IndiaNivesh. 2 scenarios. That's what we can do. They are able to raise capital. They are not able to raise capital. What happens in both the scenarios?
But even in the first scenario, if they are able to raise capital, the question really is how much will they able to? How much they will?
They are able to do as per what they indicated. $2 billion. These are a set of investors. I get capital. Let's go home. That's scenario number 1. Scenario number 2. The communication bombs. Now, whether they're able to raise 400 or 500, it's going to be a departure from the earlier communication.
Right. So I think if they are able to raise, $2 billion, that's a really significant quantum for them. It really will take the CET1, at least the mathematical CET1. You can always say that there is so much of stress and therefore I'm going to knock off so much of capital. But mathematically, at least the CET1 improves significantly. They will again get back into a virtuous cycle of business. They are already lending on the retail side. They will try to hold on to their corporate clients, and that is how the scenario will play out. From a low single digit, from a flattish balance sheet growth or very low single digit growth, you might as well see them in growing in low teens, so FY20 and more, possibly FY21. If they don't raise capital, if they are not able to raise anything, it's a very difficult scenario. Unless they are able to really resolve meaningfully the stress which they have already announced on the books. Unless that goes away, the overhang on valuations will not go away. And over the next at least 12 to 18 months to 24 months, you are going to see them, staying in a very narrow, growth band. It's going to be difficult. I mean, it could turn out to be very vicious from an earnings perspective.
So, but Ravikant, even the color of the money, like we've been talking about before during the break as well.
Yeah.
This is only step 1. This is what Yes Bank is going to do. Then it has to go to the RBI. RBI has to give approval. So there are a lot of conditionalities, even if they do manage to cough up that $2 billion, right?
Absolutely. So when I discussed the scenario 1, it was with the presumption that we are indeed discussing all goes smooth. But this is, since it's a regulated sector and since this is so important from an economy, from the perspective of the economy, RBI is obviously going to take a very hard look at the color of the money, where it is coming from, the credentials of the person. So the whole fit and proper criteria might actually be, looked at very closely with a fine comb. And I think the reports that now we are hearing that they might actually reject the proposal of $1.2 billion might have got something to do with a sense that RBI might actually not entertain such a proposal, even though on a post-money basis, this seems to be a 25% kind of a shareholding.
So, what are the options available to them then? If this doesn't happen, what happens next?
So, keep talking to investors and try to convince them that about the business plan. See, I think they are continuing to do well on the retail side. What we understand is hiring is still happening on the retail side. They have in fact retained some of their very well performing managers, not let them go, even those who had resigned. So over there, the things seem to be, they seem to be very focused. Finally, after having talked about having, retail products on the shelf, but never having pushed them out very aggressively in the last decade, finally they seem to be very intent on growing that part of the business. Things on the corporate side
the CASA has not gone down, which is absolutely amazing.
Exactly.
With all the hum and drum about the brand going down the drain, CASA, just for the benefit of our viewers, is the low-cost deposit. So when you're opening up a fixed deposit in a bank, that is part of the CASA. And I'm going to just simplify it beautifully for our, for our viewers. The money which you get is the money which banks use to further lend. If the CASA, which is your deposits, if investors and depositors, they start withdrawing, then that is called as a crunch. And then if the deposits withdrawal is far more, then it is called run on the bank. Just to put it very simply for the benefit of our viewers. The retail franchise is not dented.
Yeah.
But the problem is faith from institutional investors. Banks, they need constant money to grow.
Yeah.
So they may survive the storm. But survival is not what investors look at.
True.
Investors look at flourishment and growth. For Yes Bank, if growth does not come back, why should one really look at that stock? When an HDFC Bank or a ICICI Bank, or for that matter even Bajaj Finance, is giving you high price but solid growth.
True. I agree with you. I mean, if there is no growth, you really are not going to see your wealth grow if you are an investor in the in Yes Bank, which is why I stressed that if they don't get capital, then the only way out is resolving the stress which they already have on the book and make the book more tangible than what it is perceived to be currently. So that's the only way out. And obviously, I mean, you keep talking to investors and trying to convince, and hopefully.
But does it feel like, I mean, given that they've already been doing this process and seemingly had investors lined up, I mean, is this going to be kind of like a falling pack of cards?
So see, I mean, if you post second quarter results, they had given the investors to understand that we were given to understand that the $1.2 billion were coming from a top tier US institution. It turned out to be from a relatively or rather completely unknown Canadian billionaire. Right. So, and if you were to just think about these two events, it looks like it's all coming down. But then you also had another $800 million being contributed by other set of investors. So yes, I mean it looks like $1.2 billion are more or less out of the entire picture of capital raising, but there could be some trickle coming in from other investors.
See, what are the scenarios?
Sorry.
No, I'm saying, Aisha, what are the scenarios here? $2 billion they fail to raise, but they raise some capital. The fundraising fails completely, or they're able to go through and reach the high watermark of $2 billion. These are the only three scenarios which will work out. I would say somewhere it could be in middle. That's my gut call. I have no insider information. I have no sense of what's going on. But looking at where the feel is, looking at what buzz we are getting, $2 billion in this kind of a market would be a very high watermark for them. That's my limited view. If they're able to raise partial capital, we've not discussed that scenario. We've discussed yes or no. It may not be in binary event. Let's say if they get half of what they indicated, 800 or 1,000. Yeah. What happens in that scenario? Will the stock stay at current levels? Where is it? 54.
So they should be good. 54. They should be good to go for next few quarters. Okay. And so they did raise a similar amount earlier in
87, 86 rupees they raised some capital.
So both put together it's not what one would have aspired for.
What's the total requirement?
So I mean, if you were to judge it from a minimum CET1 requirement of 11.5%, they have some 300 basis points to cover, and that requirement could be upwards of 1.5. So I mean, this $2 billion would have actually taken it upwards of 12%, 13%. Yeah. So the regulatory requirement on CET1 is actually lower, but I mean, you obviously add to a CCB and then you come up with 11.5. Plus the peers operate above 11.5. 11.5 is the kind of a psychological mark, and you always raise capital at 11.5. You don't operate below 11.5.
So from the early 20 levels, the stock recovered all the way to those 70 plus odd levels. Yeah. From there, it's fallen to 50, 54 thereabouts. Yeah. What is the stock factoring in? Is it going to be a yes, no, or somewhere in the middle? What is this level of 54 indicating to you?
No, like Nikunj said, it's not a binary. So I think the stock is factoring that there would be some amount of capital raising,
not fully.
But not fully, yeah.
Well, I would say right now it's
so
not.
So the stock won't fall, you're saying, if it is somewhere there but not fully $1.2 billion.
Yeah. I mean, if they're not able to raise anything, then it's really a tough scenario, at least from an operational perspective.
Then, yeah.
So I would conclude this discussion by saying yes, no, or I don't know. As of now, it's I don't know. Can't say is what I think everybody has. Let's not speculate, folks. We'll report the story when it breaks. There is no point in speculating right now.